Boyer Financial Services, and welcome to the Boyer Brief. I'm here with Jason Jacoby, and we're glad to be here in this June summer months. Nice to get summer going on. It's great.
It's hot outside.
It is. It's warmer, getting warmer. So here in SoCal, so it's been great. So
Yeah.
Jason, how we doing? What are we thinking about this month as far as equities and bonds and so forth? Let's get into it.
So remember last month we talked about we saw some sideways movement, or we had talked about seeing some sideways movement, which we've seen the last few weeks, which has been actually pretty nice. You know, we like down markets, we like sideways movement. It just shows that people aren't making rash decisions one way or another, just trying to figure out where we're going for the rest of the year. So that's pretty exciting to see. We do expect stocks to continue to grow into their valuations. Obviously, valuations are really high, especially on the growth side style of stocks these days. But we are seeing with things reopening, COVID cases being low, and just continued expansion and stimulus running through the economy, we expect to see things to continue to get better. But speaking of value, kind of, again, something you're kind of the Zen master when it comes to looking at growth versus value, and you kind of saw the shift starting to happen a few months ago. Why don't you talk a little bit about that?
Yeah, we continue to like value stocks. Value stocks, again, by definition, are large cap multinational companies. The big ones that we all know the names, right? Financials, tobacco, different things that are out there that pay dividends. Basically, they're companies that have been around for a long time, like a Ford Motor or anybody that we know that's been there, Microsoft, and they've gotten to a place where they're not really opening up new markets, but they're using their profits to actually pay back to the shareholders. So those dividend paying companies are really the value companies where you look like opportunities that have really kind of transitioned the last 6 months or so. If you would have looking at it, back in November, the growth names had really taken off. The Amazons, the Netflixes, all these companies had just taken off through pandemic, and the value stocks had not participated. And now there's been a reverse the last 6 months or so, and we see that continuing as far as really liking the value companies still in here, because even if we're sideways here for a while or pull back, dividends are also, those keep coming, so it's kind of nice to get a regular dividend out of an investment. So we like the value. Growth is flirting, NASDAQ's flirting with 14,000. It's right there actually today again, trying to see if it'll break through that. High is 14.2. So growth has not gone away, but it's just not moved much in the last number of months where we've gotten some real help out of the value side.
Great.
Again, that's why we diversify.
Yep, absolutely. So speaking of diversification, international is a big piece of what we do here. Obviously, we try to weight it depending on risk tolerance, timeline, things like that. But are we seeing anything internationally, any attractive options internationally?
Yeah, same idea, right? So I think that, the growth areas, Europe is starting to get a little of their pandemic under control. You got India, you got some places that are still battling, but, I think the U.S. is leading the effort in the pandemic and opening back up. So we're seeing that. And again, the value companies, there's a lot of great value companies out there in the international space. So if the dollar, is sideways, kind of, it's kind of finding its way too, but it's the trend recently has been down. That always is, it's a real benefit to international investing. So we've got a lot of our portfolios there, and so our clients are active there, and it's a help for us.
Awesome. Well, speaking of bonds, not much to announce there. I mean, we're not very favorable in the bond market. Obviously, we do it for diversification purposes, income purposes. But with rates even tracking lower today, Treasury yield, even a 10-year Treasury is down. I think it's 1.4 and change.
Yeah, it's come back, so that's been good for bonds.
Yeah, good for bond holding. That's great. That's true.
So inflation, it could be a blip. We had a big number, like even today, I think it's up 5%. Which is can be, we really see that as sort of a short-term phenomenon. A lot of people are panicked about inflation, but we've had a lot of supply issues. I was reading an article just recently about semiconductors, and the auto industry really cut back all the manufacturing for semiconductors, and so now there's cars sitting on lots. They don't have chips. It's kind of crazy that way, right? So a lot of that and a lot of these cost issues are based on just trying to figure out the supply side. So we feel like if that catches up here, that we might have a short-term rise in inflation that could kind of level out and even drop back. So that's one of the scenarios. I mean, your worst case scenario, your mind starts thinking it's going crazy, we're going to lose, but you got to, again, get your emotions in check and realize that inflation may not be a necessarily long-term big, issue for that'll hurt our economy.
Yeah. Well, speaking of headwinds in the economy, we talked about bonds. If we're holding bonds right now, it's better when interest rates are dropping because it means the principal value of the bond's going up, right?
Sure.
So we talked about that. But headwinds in terms of, is there anything like geopolitical concerns? Obviously, there's a lot of talks of tax rate hikes, right, for corporations and higher earning individuals. Are we going to see that play out in the next year or so? Is something we're continuing to watch?
Yeah, we're watching all those things very closely. This administration is all about raising taxes and a lot of spending. The markets love stimulus, so like it or not, markets like that because people use stimulus and go out and buy products and services. So it's a benefit for the stock market. And again, bond headwinds or interest rates and the ability for issuers to be able to pay their debts, and that looks pretty solid in here. And we like bonds in a portfolio simply because it reduces volatility, and they're definitely a place there. So I mean, feel really good about all things. A lot of the market looks good. Pandemic earnings are great. It's going to be interesting to see how PE ratios and so forth. They had very low expectations a year ago. Now companies are going to have to be real true with their expectations. So don't think we'll get 80% beating estimates like the last quarter here. But again, it's very interesting times we're living in. Again, stay diversified, stay emotionally level. Don't get too high, too low, and excited to see what has in store the rest of the year. That was a good start so far. Let's keep it going.
Absolutely. Well, I'm going to throw a little curveball at you here. So for our viewers here, so is there if you could pick a single company right now, maybe on the value side of things that you're looking at or that you like and you think there's a valuation that's attractive, is there anything out there right now that you're like, oh hey, this is what I'm watching? Maybe not buying at the moment, but you're watching to get to an attractive level.
Oh boy. I think that a lot. We've talked about Verizon, Taiwan Semiconductor. I was looking at that recently, but Verizon's a good one. Got a good dividend, lots of growth there. The 5G's coming out long term, so there's some areas there in the telecommunications space that look very interesting. So, so that jumps to mind at the moment that we're keeping an eye on.
All right,
one stock.
Sorry to put you on the spot.
Yeah, that was a spot. Right.
All right, well, hey, we want to keep it shorter this month. If you have any questions, feel free to reach out to us. Call, text, email. We're here for you guys. Stay emotionally, like Mark said, emotionally level-headed. We're here if you have any concerns, but we really appreciate your business. We'll see you next month.
All right.
Thanks.
Take care. God bless.